Welcome to Unaccountable, the world's okayest game show for accounting and finance nerds. I am your questionably competent host, Tyler Otto, joined by the mildly mature Jeremy Van Grohl. Hello today, sir.
Hello. I would probably question both the validity of both those things, especially when you called me anything with mature next to my name. I feel like people in our audience who know me are going to be like, lies.
You know, we're leaving room for improvement, mildly, right? And
True.
plus, who doesn't love a good little bit of alliteration? So,
I do.
Jeremy, I'm excited because, we actually have someone other than our moms listening. At least one other person wrote in this week.
When? Yeah.
Yeah, Heather wrote in and told us, last week we were talking about which states don't have sales tax and which one do. Apparently, there's a fun little acronym for it. NOMAD. New Hampshire, Oregon, Montana, Alaska, Delaware. So now you don't have to look like a fool like me when you do a sales pitch.
And you'll never forget that, like the names of the Great Lakes.
Except when I say nomad, I'm going to be like, all right, New York, and then Ontario, I'm sure, is a state, Mexico, Antarctica. Yeah, I'm going to totally miss them all.
I believe you will. That's on point for us.
Par for the course. Well, Jeremy, we got a new game starting us out this week that I get the pleasure of running you through, which is called Take a Hike. Jeremy, we're going to be looking at several things that cost more recently, things that have a price hike, and we're going to see how well you do of knowing what's going on in the industry. You ready for a quick game, sir?
I am. Are you playing the Bob Barker / Drew Carey role here? Is there going to be the little mountaineer climbing up the mountain?
Oh my gosh, that would be so... Well, I was wondering where you're going with Drew Carey, because we could have gotten Whose Line, and which this show is nothing even compared to.
Other than the points don't matter.
Other than the points, you know what? There we go. There is the similarities, and I look like early Drew Carey. I'm growing more and more like him, less like the nowadays Drew Carey.
Get some wide glasses. There you go.
All right, Jeremy. Question number 1: after their price increase takes effect this fall, who increased their prices more per customer? Was it Netflix, effective last month, or Dext, effective in November?
Oh, this is a good question. I'm going to go with Dext because I'm going to go with Dext. But I think we also need to consider that Netflix has now cut off the sharing. So I feel like that would, and if you're going to go in deep on this as far as calculating costs, we'd have to figure that into it too.
Jeremy, I'm sorry. Actually, Netflix increased more, just under a few bucks, where Dext revamped their whole pricing structure. First of all, they're changing the name of what a lot of us get, but for many of us accountants, it only went up $1 a month per client. And in fact, they changed their pricing structure so dramatically that I know of some accountants who have a lot more clients on that program, and they're actually getting a price decrease per client.
And you said they're naming it differently. I feel like this name is going to be amazing, like Dext.
No, it's not like they're renaming Dext. We're going from Dext Prepare to Dext Practice Essentials.
Ooh, that does sound fancy.
I know. Now, because it's essential. Now we need it. But yes, going up $1 a month, at least from the email I got. They sent out individual emails to accountants letting you know what the impact for you is, but not broadly as a whole.
Which is nice, right? There is a specific vendor of ours that we consider a good partner. So having that account manager is important, and having that relationship, because when they do any of this, I ask that account manager, so you can see our history or frequency of transactions or whatever your pricing is based on. Please tell me what is most cost effective for my firm. So they need to come to me. I want to keep using your tool. Tell me what makes it the cheapest for us.
And, Netflix on the other side of that, they went up $1.50 from $13.99 to $15.49. Do you know they now have Netflix with ads if you want to go super cheap?
Yeah, I did read that. I don't know. I went from Disney Plus to the Disney Plus Hulu ESPN thing, and it's got ads on it, and I kind of hate it.
All right, Jeremy. Question number 2 coming up. Which increased more by a percentage basis, right? Not dollar amount, but percentage-wise. The national average for an average level bookkeeper. So, the Department of Labor and Statistics track things by high quality, low quality, and average quality. The average cost of an average bookkeeper and accountant, or the consumer price index of at-home food. Which in the last 12 months increased more, the cost of an accountant or bookkeeper per hour, or the cost of at-home food, which is pretty much how they classify groceries?
Yeah, I'm gonna go with the bookkeeper here, and I feel like an average bookkeeper is nobody I know, right? I know a couple lower than average podcast hosts, but bookkeepers I know are all pretty upper echelon.
Oh, I'm sorry again. No, based off of information from reasonable compensation reports, the national average of an hourly wage for an accountant and bookkeeper, both positions went up exactly 1.2%, while the cost of food has gone up 3.6%, which, if anyone doing the math at home, means that you're only getting paid 1.2% more and you're paying 3.6% more for groceries. We're getting hosed, folks. That is not good math that we're getting paid only a modicum of the increase just to feed ourselves.
Yeah, and is that a reflection of clients with independence, or is that a reflection of firm owners with their employees? All right.
That's true. And it's firm owners, but it's also, the independent bookkeepers at that random construction company or anyone that calls himself an accountant, which in a lot of states you can't do that.
Right, which is a topic for another day.
Jeremy, question 3. Which is going to cost you more later this year? A premium family plan on Spotify, which gets you 6 accounts, so you have 6 people with their own music preferences and playlists and whatnot. So a family plan on Spotify per month, or the new flat rate fee for a Corpay account for your client, excluding payment fees and...
Think I know how much that is, but I don't know how much the Spotify one is. I'm gonna go with Spotify.
I'm not trying to pick on you today, I promise. Spotify is going to cost you $17 a month for your family of 6, while Corpay is going from $0 to $25. Which, again, Dext is 20, Corpay's going 25, so I guess it's not outside the realm of normalcy. But 0 to 25, Jeremy, that does not compute in a percentage increase. That does not work.
Mine answer was wrong either way, but I was thinking, like, which is with the question, which one of them would cost me more, or which one is going to increase more. But
either way.
Yeah, either way, it doesn't matter. I'm just trying I'm trying to make excuses, Tyler, because I'm 0 for 3.
Yes, Corpay going up to $25 a month, and I'm interested to see what this does to the amount of people using them. I know you and I have been to a lot of conferences where people were introduced to Corpay, and for the price of $3.99, we were all like, heck yeah, we'll give that a shot. Now at $25 a month, more than Dext, I would argue I'm not going to have any clients on Corpay because I prefer Dext's interface.
Right, and I think it's risky for them, right, to do this and make that big of a jump right away. But I don't think it was unexpected either. Like, they kept saying that their pricing model, they made the money on the interest and float and all of that. And yeah, that may fly for a little bit, but we all know in the corporate world, that's not going to pay off what people want for returns on things. So yeah, I think so too. I think it's going to be interesting to see how that plays out in the industry.
Jeremy, question number 4. What company drew many complaints this month with their effective September 1st implementation of increased prices for their Plus, Essentials, and Self-Employed plan?
It's got to be our friends at Intuit.
Quickbooks, sir. You are correct. Increasing the cost of those plans by $5 each. So instead, and this is the retail price that they offer to the open market. You accountants, they haven't really even been very clear on what the new rates are. It's still going to be a percentage discount, but like they haven't nailed that down in email to all of us yet because some are grandfathered in. I don't know. But $5 more, so you're going from $85 to $90 for the Plus plan, and then you're also going from $55 to $60 for the Essentials. The Advanced plan is remaining untouched at a whopping $200 a month.
So we had this in a prior episode that the market is very bullish on Intuit. So maybe this is part of that, hey, they're going to broadly increase fees. They're bringing in the bill pay option. I feel like that could be one of the driving forces for this. And $5 for that, I feel like as firms, that could be painful. Like, you got to figure a way to pass that along. But if I'm an individual one or business using it, I'm going to be like, drop in the bucket, whatever, right?
Yeah. Like, it's annoying, but I feel like the name of the game in pricing for any software, the person who sets that price is What is the price people will grumble about it the most but still pay it? And it feels like Intuit $5 at a time is just betting, no, I bet you're going to be upset, but you'll still pay it. And to that point, I will, because my clients don't want to spend the money that's going to be necessary to go to NetSuite or something that, is definitely much more expensive. This is very cheap still compared to some of the bigger ERP systems that big companies use.
Yeah, but think about too how much stuff that you would have to do in your own SOP bank, core processes that you have, and training material, and all the things you would have to redo if you were to jump accounting systems. It would be so huge time investment.
Agreed. Jeremy, last question. As of September 13th, what internationally known accounting platform is increasing its prices in the UK and Australia, but leaving the United States alone?
Xero?
You are correct. Xero. They increased the price $6 over there in Australia. And then meanwhile, in the UK, they are increasing their standard plan from 28 euros to 30. So a 7% increase year over year. Now, I don't think we have any international listeners yet, but I do think this is interesting because they have increased the price in the UK each of the last 3 years in September. The last 2 years, they've increased the price in November in the United States. If I'm a betting man, I would guess maybe the United States has something coming its way as well. I'm not sure. But one thing that's very interesting is their starter plan, for example, over the last 3 years in the UK went from 10 euros to 15. So a 50% increase. Now, I know it's only $5, but as you look at those increases, it's definitely gotten a little bit steeper, but definitely still cheaper here than QuickBooks.
I'm going to have to check the current foreign exchange rate before I sign off on the $5 comment. But yeah, I agree. I'm surprised you said that there was the increase here in the US. I don't use Xero, right? But I'm surprised they're increasing the price there. However, if QuickBooks are, then it's easy for them.
Clarifying, they haven't announced anything in the US. I'm just deducing.
Even the last 2 years, right? If they're really trying to get inroads in, they have to be, they're trying to kick into it off the block. What's the differentiator, right? They do a lot of the same things. Differentiators got to be pricier until they can build it up some more. But we know everything's more expensive. Like, it has to happen too. Like in our own firms, like we need to continually increase pricing because we have to pay employees more and we have to build out systems and all that stuff. So it's got to happen. So yeah, I think that's another one that you pretty much drop in the bucket and take it.
Jeremy, 2 out of 5. I apologize. I wasn't meaning to pick on you, but well done, sir. Especially getting the big ones, QuickBooks and Xero. That's really what matters. Congratulations.
Thank you. I thought I was going to go 0 for 5 there. I would have been, man, awful. All right.
There's going to be the first shutout in the show one day.
We need to have like a dunce cap or something that we can put on the loser, which it's got to be this guy.
We need editor Ian to have a drop ready for that. Just a drop of shame, an audio drop.
Yes. Okay. Well, very much appreciated. So let's switch gears here to game number 2. So as well known to our maybe now 6 listeners, thank you, Heather. I am a nonprofit expert, and something that should be near and dear to all of us is giving charity or being charitable people, right? So I have some charity-related questions for you, sir. In this game, we are calling Charity Case because you're my favorite charity case.
Very appropriate.
All right. Are you ready?
Hit me.
All right. Most of them true or false either, so pretty, you got some chance here. Or if you fail the first time here, well. Anyway, true or false? If you're going to claim a charitable donation that you made to a nonprofit organization, you must receive a written acknowledgement if the single donation exceeds $200.
I think you're trying to trick me on the $200, so I'm going to go false.
Yeah, that is correct. I was trying to trick both, all the way you were correct there. It is false.
I don't know what the amount is, though.
It's $250.
Oh, okay.
So, yeah. So if you're making a single donation to a nonprofit and you want to claim that on your tax return as a tax deduction, you have to get some kind of written acknowledgement, emails count, obviously, that of what you did, the date, the organization, their tax ID number, etc., that you can give to your tax preparer to put into your next tax filing.
Okay.
Yeah, nice work. All right, number 2. True or false? A business's charitable donation generally are limited to 10% of its taxable income.
I always have to look at the rules. What's at 65 and what's. I'm going to go false again.
That would be true, sir. However, as I believe it was part of CARES Act, that amount was increased to 25% in 2020 and 2021 based on the whole COVID thing and trying to get some goodwill out into the nonprofit world. But yeah, generally it is limited to 10% of income, not gross profit, or not like profit. Yeah.
Got it.
Yeah. All right, moving on. True or false? The National Football League is a nonprofit entity.
That is true.
You are correct. That is true, and something that I think still surprises a lot of people out there. But the typical nonprofit that you have, and that will be one of the only ones where you can actually get tax deduction for your giving towards, are 501c3s. The National Football League is a 501c6. So again, that's the IRS tax code. These 501s go all the way up to at least 501c29 or so. The one that the NFL is under is actually also like for business leagues and chambers of commerce. Some of the other ones that you may be familiar with, 501c14, are credit unions, right? So that's why credit unions can give lower rates and give back money and all that stuff because they are a nonprofit organization of sorts. However, my favorite one, would you like to hear this?
I would love to.
Favorite 501c13 is cemetery companies owned and operated exclusively for the benefit of their members or which are not operated for profit, and any corporation chartered solely for the purpose of disposal of bodies by burial or cremation. To quote,
And I love that it's 13. That's awesome.
yes. I love it too. So yes, NFL is a nonprofit. Nice work. All right. Next one. The true or false, the total donations made to a single charity of over $2,000 requires that the charity discloses the donor's information to the IRS in its tax filing.
False?
Also correct. Nice work.
You can hear the confidence in my voice.
Yes, you were very confident. Also false. It is actually $5,000. If you give over $5,000 of value to a nonprofit organization and take that as some kind of a tax deduction, the nonprofit must file in their 990, which is the nonprofit tax filing, your information, name, address, all the things, and that gets reported to the IRS. If you are not familiar, all of the nonprofits' tax filings are also public record, so you can find them. However, this page does get sequestered, or I don't know, taken off or whatever, not included with the public filing that gets available out there that is searchable.
Interesting. I learned something today.
2 weeks in a row.
I know.
Yeah. Awesome. All right, last one. You're doing really well.
Thank you.
True or false? If you're donating goods, not cash, to a nonprofit organization, and we talked about only one we can get a tax deductions, the 501c3, the organization is required to provide an estimated value for the item in an acknowledgement letter or receipt.
I think I know this answer. And no, the organization does not provide the value. You have to come up with the value. The donator has to come up with the value, not the donee.
Absolutely true. Correct. By law, the organization cannot establish the value. The donor has to provide that and then have something to support it. And typically it's something on fair market value. So yes, if you think vehicles, you'd want to blue book it or whatever, right? And speaking of, if I see another one of those Cars for Kids commercials, I am going to lose it. Have you seen those?
I have not, but I don't watch TV, and we also don't support kids here in Utah, so
I'm
kidding. That's all we do. Everyone has 12 of them.
I think I've seen it only in YouTube ads where I'm playing a playlist and it'll come up there, but I'm just kidding. Cars for Kids, I love you. Call me. We're about to keep forever. All right. Nice work. I think you got 4 out of 5. That was great. Maybe we made it to halftime. All right. It's halftime. And Tyler, you know what we do around here at halftime. We take a big old bite of an app as an app snack. Let's do that. And today, do you know what we're talking about?
I don't. Please remind me.
Today, we are talking about Divvy.
Right? Oh, yes. Good old Divvy. Which actually, okay, so Utah-based company, I love them. And then they got purchased by Bill.com, which currently goes by the name Bill. I think it's because originally it was named Walter. William. William is Bill, right?
Yeah.
So William purchased Divvy and is renaming it in the coming months to Bill Spend and Expense. So interesting there, but hopefully the platform stays exactly the same. But yes, Divvy, much like Ramp or Brex, it's a credit card spend management program where you can allocate budgets, you can issue tons of ghost cards, tons of physical cards, and manage an entire fleet of expenses. And you could say, hey, I'm going to issue a card to Jeremy. It only has $10 on it, but then Jeremy can request exceptions and we can give him more money. Or the moment we terminate him of his services, we can turn off his card and not have to worry. We can have it send automatic push notifications to him every time he spends money saying, hey, upload the receipt. And they even have a rewards program. It's a little bit goofy in the sense that you have to spend a certain amount of your available spend every month to get your rewards, and then you can't redeem them for the first year. So it's a little bit goofy in that regard, but for a lot of our clients who had a fleet of team members that, let's say they have people out in the field doing construction, and they wanted them to have a card on them that they could always spend money, but like no balance unless they requested it. This has been awesome for those clients to be able to manage spend on a credit card basis, and then for us to be able to track the transactions.
Yeah, so I think we have our first client going on what the artist formerly known as Divvy soon.
Mm-hmm.
I'm interested to see it and to see what all comes out of it, right? So they do advertise there's no fees, right? Like, so no fees at all? There's no sneaky thing?
There are no fees.
Okay.
It is my favorite price, again, free 99. Like when people ask what my favorite type of food is, it's free food. Not Mexican, not Indian, not American. It's free. So Divvy is right up my alley. And then, yes, you can still get credit card rewards. Now, the rewards aren't as good if your client is gung-ho on sticking with that Amex Delta for their miles. You're not going to get better rewards here, but you're going to get a lot better spend management. And assuming William doesn't go and change the structure at all, I think it's a great product. Now, again, if they're rebranding it, William might do something. Bill.
Don't break it, Bill. One other question. So you talked about ghost cards, right? So I've not done that, but if I understand the concept correctly, is you can create a card number, CVV code, all the things, expiration, and just give it, like, send it to a message to an employee and say, use this with all the online tools and it will work.
Absolutely. Even better, we have certain softwares where it's like, I want to try a demo of it. And they're going to ask for a credit card and they're automatically going to bill me in 2 months, if I don't cancel the demo in time. I don't know if this is their intended use, so I shouldn't advertise it, but I'll create a ghost card for that account and I'll have it expire in 30 days. And then that way, if I end up not liking the software, it's automatically a dead card. Otherwise, I can go update it with a real card later, but like I can have a legitimate working card. And I also do this like in the rare cases I've paid contractors or vendors where I've given them, hey, here is $3,000 on this card. Charge me when you're done. The card's only authorized to that amount, and I don't have to worry about canceling the card later on. It's just one off, and it's only for that. It's labeled in my Divvy account, Jeremy Van Grohl Inc., and I can either fund further amounts onto that card, or I can just kill it whenever I want. So I have probably 30 or 40 vendor cards in my Divvy account that are just for this specific vendor, and I can kill it whenever I want.
Oh, that's cool. I do like that because we all been with that vendor that you just can't get them to cancel as much as you tried. Like, no, I've called, no, I've sent emails, whatever, and they just keep charging it that you have to like tell your credit card company to stop the charges. That's awful. Cool.
I absolutely love it because all my employees have their own Divvy card, and I have them put Adobe, right? Because they need the PDF editor and all that stuff. I have them put Adobe on their card. The moment I terminate an employee, I can just kill their card and no more transactions can go through. It's super quick and simple. So huge fan.
Nice. Yeah, no, I appreciate that. We'll have to look at that a little bit more.
Well, Jeremy, on to In the News this week. And if you're okay with it, I'm going to kick us off with an article that I think many of us should be rejoicing in.
Yeah, let's do it.
So we got an email from Intuit, which basically says that they have acknowledged that many of us are frustrated with the fact that our clients, when they log into QuickBooks, get a different user menu experience, and to go find the bank feeds, you have to go like into bookkeeping and transactions, but on our accountant view, you go into banking and then feed or whatever. They've heard us. They actually acknowledge that none of the accountants are happy that we're trying to figure out how to explain to our clients to get the same area we are. And so they are going to go through and phase out the multiple views, and it's going to be much closer to the accountant view when it's all done, the one that we all know and love. They say they're going to do it in several phases, where phase one is an opt-in period where they can try out the new navigation menu and provide feedback and how it works. And then phase two, they'll gradually roll it out to all users, and there will no longer be this business view versus accountant view feature, which has just annoyed me to no end when I'm trying to teach clients. So I'm a big fan of this. Jeremy, your thoughts?
I could not agree more here, because there have been multiple calls that I've been sitting on trying to get a client to put the bank feed on or work through this, whatever. And I can't figure out where the heck I need to go to get this. And I look like an idiot. And we both know there are a lot of things I should look like an idiot on, but
you don't need help.
Yeah, navigating QuickBooks is not one of them. So I'm like, where the hell is this? Trying to go through. Yeah, very welcomed. And who thought this was a good idea? Like, I'm trying to think. The one place that it may make sense in my brain is if the person is like internal and they have one internal business that has QuickBooks they're only using for their business. But then even then, you should only have the business view. Like, why the two? Yeah, I don't know.
Completely agree.
Good call. And Intuit improving something?
Listening to the customer.
All right. Oh, yeah. Yeah. So for my article, I saw that this week they announced that there are now 15 accounting firms that are in the $1 billion club within the United States, right? So, Ian, can you give me a Beatles reference to the Money song? The best things in life are free, but you can keep them for the bears and... Like classic Lennon there, right? I think we name dropped Ian earlier. Ian's our editor. We love him. So when we drop with things for Ian, that's what we're talking about. So we talked about the big four, Tyler. And
Yes.
like, I never compared revenues before. And I know this may be a fast figures thing I'm wasting, but if you had to guess, like, who's number one and how much do you think they made?
I'm going to guess Deloitte is number one, because they're probably still sitting on all that taxpayer money from what they were supposed to build for like the tax program that has never materialized. So I'm guessing they're sitting on all of our funds still.
Yeah, that is correct. It is Deloitte at almost 28 billion.
Wow.
Yeah, right? But then you always hear the big four and I'm like, is there that big of a difference? So there's Deloitte at 28, PwC at 21, Ernst Young at 21, KPMG at 14 or so. Then it drops. The next one is RSM at under 4. So that's why they're the big four. That's crazy.
But I mean, Deloitte being double KPMG, like, a little bit league of their own.
Yeah. Oh, I agree. It's almost like KPMG is kind of getting like, the other ones are over 20 and they're barely at 14. I feel like it's almost the big 3+ one, but
Don't tell Jackie Anthony that we were talking down on KPMG. She will get mad.
I'm sorry, Jackie. But yeah, like, hey, bookkeeping accounting firm owner, set your sights high.
Absolutely love it. Well, Jeremy, we got one game this week, and we kind of threw things off because we threw our staple to the end, but it is a round of fast figures. Ladies and gentlemen, for those of you that have not listened before, fast figures, we're going to put time on the clock, and Jeremy, as quickly as he can, is going to have to answer 10 questions where an exact number is the answer. So, Jeremy, after a strong performance 2 weeks ago, are you ready for fast figures?
Hit me.
Putting time on the clock. Jeremy, we begin. Under the Augusta rule, how many days can a business owner rent out their home to their business?
14 days.
What is the largest denomination ever printed by the U.S. Mint?
100,000.
What number is Heinz Ketchup famous for advertising for their number of varieties?
57.
How many employees does a company become required to cover an employee under the Family Medical Leave Act?
10.
How many hours a week must you work to be considered full-time?
27.5.
How many official Disney princesses are there?
Oh, 12.
How many zeros are there in a trillion?
12?
How many toes on a rhino's foot?
4. I don't know.
What year did J.P. Morgan become a bank?
1823.
How many minutes did Justin Timberlake and Madonna have to save the world?
5.
All right, Jeremy, let's see how you did. And first question up, under the Augusta rule, how many days can a business owner rent out their home? You said 14? Well done, sir.
Wow, really?
Yes, 14 days. And so this is the beauty of the Augusta rule. Like there's certain rules of it has to be a primary residence or how it can be qualified as a secondary residence and still qualify under the Augusta rule. But a lot of business owners, if their structure allows for it, they can rent out their home, say for a team meeting or for any sort of sales event that they're doing. And if it qualifies, they can pay out fair market values and get that money out of their business tax free. I know personally, I have my team coming to Salt Lake for another retreat, and we're getting together one of the mornings here just for brunch and hang out before everyone hits the airport. I'm going to be renting my house from my business for that morning.
Ooh, that's smart. Yeah, my team, guess where we're having our next retreat?
Jeremy's basement.
Jeremy's basement. Do you know if it's named after like the capital of Maine or the golf course?
It's after the golf course because so many people, when they, they have their homes lining the golf course and they would rent them out at exorbitant rates for that 1 week, and anything under 14 days don't have to declare as income.
Oh, cool. All right. I can't believe I got it right.
All right, Jeremy, question number 2. What is the largest denomination ever printed by the U.S. Mint? You said $100,000? Well done. And what's interesting is the $100,000 bill wasn't ever released to the public. It was used for Federal Reserve banks to pay off debts to each other. The largest bill ever put into circulation was a $10,000 bill, but they discontinued making them in the 40s and circulating them in the 60s. So odds of you ever seeing one is very minimal, but with the way inflation's going, we might need to bring them back because, you know what, we're getting rid of the penny and the dollar bill is pretty much useless at this point.
I'm going to like right now Google how much would a $10,000 bill be worth right now because I feel like it would be ridiculous.
Oh, absolutely. All of those are sitting in the hands of collectors.
Yeah.
Gotta believe it. Jeremy, question number 3. What number is Heinz famous for advertising as their varieties? You said 57.
Yeah.
And every time I hear this, I hear Jimmy Buffett and Cheeseburger in Paradise with some Heinz 57 and French fried potatoes. Well done, sir.
Yeah. Yeah.
At how many employees does a company become required to cover an employee under the Family Medical Leave Act? You said 10. The correct answer was 50. So, under 50 employees, which is a great spot for all of us. Luckily, you don't have to take on that burden that comes with the Family Medical Leave Act. Now, I'm not saying it's a bad act, but it's also hard for someone at 10 employees to hold someone's job available while they're out for several months. So it makes sense why they don't enforce these rules on employers under 50. But if you have any clients that are starting to get up there, you may want to make them aware if they're at 45 employees that things might change very soon once they cross that 50 employee threshold.
Yeah, I agree. And that, especially if they don't have, you'd hope they would have an HR professional or something there that would help them with this. But it's one more thing that you can put out there and show your big brain to the clients.
Yep. Jeremy, how many hours a week is it considered full time? You said 27.5. I would have thought you would have had this one. 30 hours a week is considered full time.
It was one of those things where the 30 was on my brain, and then I was like, no, I feel like no. Fail.
Yeah, and most bookkeepers and accountants know this one, but most business owners don't. As elementary as it can seem, like this is one where we can also help our clients just by advising because they think they're going to get away from any sort of benefit and salary requirements that will apply. 30 hours a week is that threshold.
I appreciate how you said most bookkeepers and accountants know this.
Jeremy, how many official Disney princesses are there? You said 12.
Too high.
You were surprisingly close. It is 13. And don't ask me the logic about it. Like, I don't understand it. But some of them are in, some of them are out. There's like some OGs that like don't get dropped off the list apparently, like Snow White, Cinderella, Aurora, Ariel. And then like there's ones that are coming and going, like Raya from the Magic Dragon and Moana's in there. And then there's even ones that like got knocked off, like Tinkerbell apparently got kicked off the island. Yeah, poor Tinker.
Tinkerbell. Oh, interesting. Okay. I thought I was over when I said that, but okay.
13. Jeremy, how many zeros are in a trillion? You said 12.
Nice.
Well done, sir. Easy counting right there. How many toes are on a rhino's foot? You said
4. It's 2, isn't it?
split the difference. It's 3.
3? Okay. That one was a funny question. I loved it.
What year did JP Morgan become a bank?
I said 18 something. I saw your face and you're like, boy, you are on crack.
No, I mean, my face was like surprised because you said 1800s, which was good, but it was 1871. I don't remember what you said. It was just wrong. So, 1871, which it started out as Drexel Morgan and Company. And the reason I like highlighting this one is because anyone who's a fan of Alexander Hamilton, Ron Chernow wrote the book that then Lin-Manuel Miranda made the play of Alexander Hamilton about. So Ron Chernow wrote that book. He also wrote a book about the House of Morgan, which he was actually hoping to write a history of the entire U.S. financial system, but couldn't get enough funding to pay for that book. So he just wrote a biography of the longest running bank in the U.S., which is JP Morgan Chase, starting with Junius Pierpont Morgan, which is a really interesting, I would say read is tough because it's pretty long, but a listen to understand like how JP Morgan has pretty much been involved in every single financial thing that has happened in this country's history, even down to the Titanic. It's a super interesting listen if you ever have the time. House of Morgan, Ron Chernow, and just understanding our entire financial system of the U.S.
No, that's a great truth nugget or nugget that you dropped there. Because even when you asked the question, I was thinking Alexander Hamilton and like when was he putting things of banking in place? And so I think I would have guessed way later if not thinking, well, that was it around the 1800s. Yeah, so good nugget.
All right, last question. How many minutes did Justin Timberlake and Madonna have to save the world? It was 4 minutes. Ian hit us with a drop of it. But Jeremy, that was incorrect. 4 minutes. They've only got 4 minutes. 4 minutes. I watched that music video again in preparation for this podcast last night. The music video doesn't hold up.
No,
So-
it's kind of like the Journey one was like considered like the worst video of all time.
Exactly.
Yeah. Wow.
Jeremy, 6 out of 10. Well done.
Yeah.
And now it's time for our winners and losers of the week.
All right. Well, thank you. Winners of the week, I feel, are us parents, right? Finally, the kids are going back off to school, right? I think I have one starting this week when this will drop. And I know there's several people on our team that there have already gone. So finally get back to normalcy in the house on day-to-day things. Business owners or accountant business people can get some of those hours back in, which hopefully is a good thing. Now that valuing that freedom that you have with the kids over the summer is not just as valuable.
And for a loser?
Loser, I'm going to go with home buyers. So mortgage rates on the 30-year mortgage ticked up over 7% this week. And lots of people losing their mind over it because it's super high. So more than double where it was at its lowest point, right? But I feel like some perspective should be necessary. Like in the 80s, it was 18.6, right? So yeah, that's a lot of jing out there to get a mortgage. But thinking about how we can use this in the community. So especially if you're in the real estate niche, your costs are getting higher to finance properties, right? So is that something that you can give insight to? Like, what is your trend of interest expenses? Are you working that into profitability models? Or especially if you're forecasting out purchases, what is that going to cost you, et cetera?
Well, and I think it's also interesting to note, like, I would assume there's going to be less people buying houses as investment properties as a result of this, which means if your niche is real estate, there might be less clients popping up in the near future that they're either getting into the game for the first time or they're adding enough additional properties that they're then renting out for it to make sense to hire a bookkeeper that's outsourced. So this could have negative impacts for any real estate centric niche, whatever you said, bookkeeping firms.
Yeah, I could see that too. So great things to keep out there. But also, yeah, if you're in the market for a house, plan on putting some more of that salary aside each month for the payment.
Well, Jeremy, that's all we have for this week. For everyone else, now that we have, I think, a solid 10 of you listening, go and leave us a review, whether it's on Apple Podcasts or Podchaser or anywhere else you listen to your podcast. We'd love to hear what you think of the show and which one of us we should be getting rid of and substituting for a much better talent. So let us know what you think in the reviews. As for that, Jeremy, until next week, Keep being mediocre, sir.
You as well.